Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Little technical difficulty, but here we are. Little technical difficulty, but here we are. All right, let's get going and moving along here. Let's see, let's remove that, and let's open up this. Let's see if we are good sound. Looks like it. Okay, looks like we're good. Not bad. All right, as you can see right off, there's the Swiss franc on the J4X. You can see what a, very powerful in the sense of compared to normal trading. You see that nice big slide going on the Swiss moving down, which means the dollar is going down and the Swiss is gaining in value. And when we see it over on Chicago Quant, let's check where Chicago Quant goes. There it is, right there. See the same thing. They did that yesterday. They slammed it down. The market's, I guess now it's back to another form again where they keep on bouncing back and forth in the range, and we're seeing the same thing in some of the other products. In other words, the euro and the what's the other one? The British pound. They're making the moves. Before they were reflecting all the strength, and the Swiss was having an issue. And then now all of a sudden you can see the Swiss is just like literally like as if they've been listening to the webinar here, and just made a quick run, to adjust, to straighten itself out. You can see it over here on the Chicago Quant right there. Same thing. They hit the top of that range for a couple of days and then bang right down. And now look at that, right down to where they started from. No more than is that 1, 2, 3, 4, 5, 6, 7, 8? Is that really right? 8, 3, 4, 5, 6, 7. 7 days. Taking it to get up to the top of the range, and then bang, smacked right down again, and going into a daily sell there at the close of yesterday. Let me see, what else can we say? We see that the weekly has totally rolled over right here. Totally rolled over. And here we are at Thursday. And hey, Douglas, how you doing? How are you, Douglas? You see anything particular you want to see? How about this, huh? The way the dollar is being sold down. Trying to think, what can we say about that besides we know about the inflation? I guess what it comes down to is that they're interpreting that the interest rates are just not going to go up as high as normal inflation, period. I don't know how they're going to get away with that, but they did say they're going to do four interest rate increases. That's what we've been saying here. We've been thinking, Happy New Year to you too. I think I have a sip of my tea as I get started here. Feels good. All right. So Happy New Year to you. I hope it was a good New Year. New. Yeah, really. It's going to be a very interesting year. We're going to see these interest rate increases. We're going to see the inflation kind of hang around the 6 to 8% area. That's what I think. Yesterday the news came out that inflation had not been this active since the peak of the last big top in inflation. The move up, in other words, in this case, and that was at 1982. So that's where Mr. Reagan kind of got full control of the inflation factor and started knocking it down. It's going to be a fun new world, I guess you could say. What Mr. Obama used to say? The new. So now we are in a situation where we're going to be the new. Remember I used to say that? New. Crazy stuff. All right. So, let's drift over to the euro and see what the euro is doing, but we all know it's very strong. Let's see, where's it at? Let's go to J4X. Right there. I see it now. There it is right there. And let's get it up on Chicago Quant at the same time. There we are. And you can see, you know, it's heading towards its 50. Whoa, let me move that. Right there. It's moving towards its 50 percentile. We were defining 116 as the middle of the range, I think. I think that's how it worked. Let's contract this a little bit. Is that what it was? No, I can't see. I'm a little confused there. Oh, I guess this is what it is. So we got like this. So the top end of the range is there. The I guess at one time we thought this was the bottom of the range, where these other white dots are right there on the Chicago quant. But now we have a Fibonacci sequence going back a couple of years, seeing it bounce between these ranges. In this case here, it got down to there in late November, and then, you know, it's kind of found a base in it, and it's making its move back up to the 50 percentile. I guess we'll see. I guess we can get rid of that, since we have the Fibonacci sequence representing the bottom end of the range here, where the black is. I guess we could have moved it down. That's what it was. And then you can see the white dots up top here at the top end of the Fibonacci range. So now we're getting ready to challenge the 50 percentile in the euro. Yeah, it is strong. It's I guess, you know, they're money. You know, a lot of times we always say in the marketplace that money likes to have consistency. They like to have continuity, and they don't want surprises. And when the Federal Reserve comes out and says, "Oh, look, you know, we're going to straighten this mess out. We're going to increase interest rates 4 times, and you know, we're going to fight this inflation, and we're going to reduce our balance sheet," that probably throws some confidence into the market. That's the way to kind of like look at it or describe it, or, you know, trying to interpret why we're seeing money committed in one direction all of a sudden. That's usually the reason. Money is confident right now. You know, the investors, you know, the funds, the managers are feeling a little bit more comfortable with what is coming in front of us. You know, what's coming down the road over the next 6 to 12 months. So they're looking at that and they're saying, okay, well, the dollar is only going to go up like, you know, maybe what it, you know, I had this really odd, I don't want to call it a fantasy, but I had this really odd idea yesterday when I was talking, and I was thinking, as I was talking, I was thinking, what if they put pressure on Europe to raise rates? Remember, there's like 15, 14, I don't know, trillion in minus rates at the moment. So in other words, you buy a government bond, and the government takes your money, you know, and they hand you a bond, and then at the same time, instead of you getting interest on your bond, in other words, you get a little stipend for buying that bond, you pay interest to the government. Okay? So it's a lose-lose situation there. And I was thinking, if they want to kind of squeeze some of the inflation and so forth, maybe they raise rates outside the United States as much as they raise it in the United States, which then, you know, there's a lot of other ideas like that flow through my head about that, and I could go into it deeper, but that could be, this could be the beginning of a little interest rate increase across the planet, and at the same time, money would be willing to buy euros. Money would feel more comfortable buying Swiss. Money would be more comfortable buying British pounds versus buying dollars. You know, that's out of all of them. So in other words, you buy euros instead of dollars, buy Swiss instead of dollars, and buy British pounds. And I thought about that in the morning, whatever I was rambling about at the time. I thought about that, and I thought, you know, this could be a backdoor for them to put pressure on the other countries to raise rates. You know, and right now they don't pay any interest at all. And that really doesn't, you know, that's not really good. But, you know, I mean, that process is really not good. So I thought, you know, that could be a possibility, and I swear, here we are today, and they're doing it. And I'm like, wow. I thought about that. When I'm sipping my tea. Sorry about that. I was thinking about that when I suggested whatever I was suggesting yesterday, and now I'm actually seeing it. So my mind was theorizing. That's probably not delusional thing, but a theorizing process. I was thinking, okay, what's down the road? What are they going to do? In other words, if they raise rates here, that's only going to push the dollar up. And is that really, I don't think inflation's going to be that much of a problem. I really don't. I know that's funny to say, but I really don't see. Most of this inflation is created by Mr. Biden and the Congress. And so once they're going to be out of office basically in a year, they're going to be gone. And in 10 months, they're going to be stunned. In 10 months, the elections will be, or 9 months, I'm sorry, the elections are in less than 8 months actually at this point. They're in November. Okay, and here we are in January. So you have the rest of January, or you could say February, March, April, May. Let's do that again without me pulling my teacup. February, March, April, May, June, July, August, September, October. So you have 9.5 months to the election. 9.5 months. And so if they raise rates a little bit here, and they raise rates a little bit outside the United States, and then in 9.5 months we get a whole new Congress that's not doing all these strange, odd, very strange stuff. It's going to be, the inflation could literally go, let's say inflation gets to like 7.5%, 8.5% by the election time. It could literally, you could see going into January of 2023 an inflation rate that may have dropped 2 or 3 percentage points, literally in a matter of months. Does that make any sense to anybody, or is it just me? In other words, if they put pressure on the other countries to raise rates finally, they haven't done that in 13 years. And that they're lending money to them. They're propping them up. The Federal Reserve is doing all that. That's why their balance sheet is so enormous. We know what's going on. So in other words, this is going to be an interest rate increase across the planet, which opens the doorway for people to buy their currency and sell the dollar. Now, as the dollar drops, that increases inflation on some level. Nothing major, but it does increase a little inflation. But right now, none of this is making any sense. What our government is doing now makes no sense whatsoever. And the reason why I say that is the polls. They really don't like the people in government right now, in control. And the polls are horrendous, historically horrendous. I mean, just historical. And they keep on doing the same things over and over again, which is really strange. It's like as if it reminds me of what do they call them, kamikazes during World War II, where they used to crash their airplanes into the enemy vessels and so forth, and they were willing to give their lives for that. It's very strange. I don't know how to else interpret it. But anyway, that's probably why we're seeing strong currency pairs against dollar now, and it's probably going to be that way now for I don't know, all the way up until anything's possible. Because I'll tell you this, we get up into November, 9+ months from now, and the elections are going to look incredible for the opposition. I mean, we're seeing it now in the few states that are having elections. They're winning big. They're crushing Democrats left and right everywhere. I mean, people are running away from the Democrat Party, just running away. So no one understands why these people are doing what they're doing. It doesn't make any sense anymore. So anyhow, can you look at the Nikkei? Yeah, let's look at that. And we did look at that yesterday. And we were kind of impressed how the Russell and the Nikkei were kind of matching up with each other. Let's see, where do we go from here? Let's go like this. Let's go down to the Nikkei. It's right there. right there. There's the Nikkei. I have a little cold. My nose is a little stuffy. Nothing major. That's why you hear me go make noises like that. And there's the Nikkei. You can see it's been in, I guess it wasn't a daily. I'm not sure what that's all about. Let's give this a refresh. There we go. Like I said, it's right there. So I went into the buy a couple days ago right there. And let's look at it on J4X. Right. There it is right there. And when we go like that, you can see it looks just like this here. The December low right there. You see a higher low there. You know, it has that look like it's trying to get going. But you know, you can see how far off it is. We were talking about that yesterday. I think that's when you brought it up. It was very interesting. You know, the fact that they are still 33% off their all-time highs, which is back in the 1990s. So you're talking about, you know, they like to call it over here lost decades. You know, we have, in the financial markets, we have a habit of creating really soft examples. You know, like the way Chairman Powell was calling it transitory at one point with inflation. In this case here, they like to refer to the fact that Japan has not seen an all-time high since 1992 or something like that. And they like to call that the lost decades. How polite that is. In other words, no, you're not losing money. It's just lost decades. I just have to laugh when they do that. All right. So you can see the Nikkei is doing that. At the same time, I'm going to show you the Russell 2000 over here. And if I move this over a little bit so you can see both of them like that, you're going to see. So you can see this. There's this low here, and you can see this. This is the high there. See it there. Now, let's put the. There it is right there. The Russell 2000. It's the same pattern. It's interesting, isn't it? The only difference is that that's an all-time high right there for the Russell. But it's trading the same type of pattern. Yeah, you know, you watch, if you can see the Russell 2000 and the Nikkei, it's probably a very positive thing. You know, you'll be able to catch what's going on there more. And then you could put it, if you're using our the indicator that we use on the J4X there, like that. Let's see what it looks like on a weekly in J4X. Look how it's climbing back up in here too. Let's get the weekly up there. As you can see it here on the Russell, you know, we're still in a sell. And let's go back to the Nikkei. You can see we're threatening to go back into a weekly sell there. We jumped up, was it 1 week or 2 weeks ago? I guess 2 weeks ago. We went into a buy here, and then you know, climbed and tried to go after the high of the summer. I guess November, that is, last year. Keep on forgetting where we are time-wise. And then next thing you know is it's pressuring it now. And you know, we're also seeing that with the NQs. The NQs are doing the same thing. That's the right there. You can see the same thing. It's in a weekly sell for a week, and you can see it over here on J4X. Where's that now? So there. There's the Tech 100 on J4X. Let's see, right there. Yeah, you see that there. Whereas the weekly on this is still up, where our work is trying to, you know, went into the weekly sell this week in here, and then you know, we did the lows and still hasn't taken out that area up in there. And maybe it'll curve and roll back over again. I'm not sure. This is going to be earnings week also for the S&P 500. I guess at the end of this week, going into next week, earnings week starts. And what will happen is that you know, they'll be showing a lot of the companies are going to have good earnings. They're not going to have bad earnings. You know, I mean, prices have been going up. They've been able to increase prices, so it's going to reflect in their earnings. But supposedly, the projection for the next 12 months, earnings are going to start to pare out a little bit. They're going to top out. So that'll be like another, that'll be pressure on the stock market. But if the stock market is looking beyond that and looking at, basically what we're going to possibly do is go back into a Trump economy again, because Trump has candidates everywhere and people are voting for them everywhere. So it's going to be a Trump economy. All right. Now, where did we leave off? Oh, let's go back. We were looking at the euro, so let's go back to the euro. Right there. There's the euro. Let's put it up on a daily, like that. And let's go back over to here. There we are. We were looking at the euro, and I love it. I wonder, do you look also at individual stocks? Oh, sure. Sure. Would you like to see like like Apple or something like that, or Coinbase or Ford Motor Company, or you tell us what you'd like to see. I'll show you a stock. Let me take a sip of the tea. I seem to be fighting a head cold. PayPal? I don't follow it, but let's take a look at it. I use it, so why not? All right, let's see. Open. There's that. Okay. Now that's what is that? That's a PLD, whatever that is. And let's find out what the symbol is for PayPal. Make a copy of this. What do we got? Let's see what the window looks like. Where can we put PayPal? So there's Coinbase, there's Aramark, EWZ. There's that Brazilian one we're always following. That's kind of neat. Let's make a copy of that, and then paste it, and we'll put PayPal in there. Let's find out what the symbol is for PayPal. You know what the symbol is for PayPal? I'll look it up. Trading. PayPal. PayPal Holdings. Okay, so PYPL. All right, that's pretty easy to do. Format. PYPL. Stock's trading around $187. Oh, I gotta look it up. So add a symbol. There it is. There's a snake there. There we go. It's NASDAQ. Add. This is always fun. I always find it. Excuse me. I always find it interesting to do something like that in front of everybody. You get a chance to see the math do its thing. Let's see, P. There we go. All right. All right. Now there is PayPal. Let's see how it worked. Now we don't know what the beta exactly is, but we can get a general idea if we go like that. So it went into a sell. Let's see. Let's move this up a little bit like so we can see the two indicators. So let's see. It was in a sell here. It's using a gas line 5. Then it went back into a buy there, and went back into a sell here. So we can do this. So there's our sell. There we go, and that was the buy. And then back into a sell again. And it looks like we went into a buy just recently in the last couple of weeks. On a week-to-week basis. So you can see there, it goes into the sell there. Now, here you can see, using the old lines, we can move those around. So let's do this. Let's move those down. We'll put them back in again like that. I always find this fun. Truly entertaining. That's why I always say people should always, ask questions, because they're missing opportunity to get me live, or a product they're trying to follow live. See right there, right there, right there. Okay, so now let's do this. Now it goes into a cell here. See, it was in a cell there, so let's put a cell in there. So went into the cell there, and then let's see if we can widen this a little bit for better visuality. And you can see it goes into a buy here, but we're in a weekly sell now, so you can't take that buy, right? So you're not long, but you can get short off of that one because we're in a weekly sell. So you go into the sell there, right there. It goes down for like 3 days, and then we go back into a buy again. Let's move that over to there, like so. Again, you can't get long. Again, why, traders? Just a reminder all the time, because we're in a weekly sell still. And so all we can do is take sells every time, but not the buys. So then we go into a sell right there, and you catch this whole winner chicken dinner all the way down to here. So what is that? From the 260 area all the way down to the $200 area. You catch that sell. And then, let's see what we do here. Let's put that there like that for a moment. And then let's widen that again. And let's see that it doesn't get into a buy until right here again. But you can't really do the buy because you're in a weekly sell. So you're not getting hurt here. And then what happens is literally the next day it pushes you into a sell again after making $60. And it falls apart from the 206 area all the way down to the 187-ish area. So that's pretty good. Is that right? Yeah, so that's another $23 winner chicken dinner there. And it stays in the cell all the way up to right here. So we take it and put it right there. Goes into the buy. And so you're not short anymore, and you've locked your money in. And then you go into a sell right there, so let's put that in. That's a small win there, maybe $4 or $5, something like that. What was that, from the 88 area? It goes down to the 83 area, 82.78. So that's another nice little win. And then it tries to do it again. It tries to go back into a buy right there, and again you can't take it because it's in a weekly sell. And then you get another sell here, and you can see it's diminishing. The power is running out of it. You can see here we're playing with a weekly. We close in the weekly right there. So go like that, and we're in a weekly buy at the moment as we speak. There we go. Let's just widen that a little bit more for you. That, and let's see, we can take this one, and that's a buy. So you might be long in there, barely make any money out of it though, because it's just going into the weekly buy, and it didn't do it seems like until the end of the week here. So might be long for this and basically just riding it, wondering, and it goes into a sell there, and you take a loss. You actually lose a little money. So you got to lose once in a while with our math. You can't always just keep on win. Let's widen that too a little bit more for you. There we are. So we get into the sell there after going into the buy, so it breaks even basically. Then we're just a little loss, and then it's in a sell, but you can't take the shorts out of this, but you can take that buy right there. Right there, yeah, that's the buy. And then let's see, where does it go from there? We go back into a sell the next day. So you get out of your, so we move that down. You get out of your buy, and let's move that over there like that. And then You might give up a few do-re-mi's, and then I guess now you're starting to make money again. So because now we're in a weekly buy for a couple weeks, and so the next move is right here, and I guess we're still in the buy. So you go into the buy here, pushes you around a little bit, but it's higher than where you went into the buy at 87.60, and the high there is 92.80. 87.60. So that's $5. So it takes you back up. So whatever you gave up over here, you've made back now, and you're still in the buy, and we're still in the weekly buy. So you can see this morning. Is that today? Yeah, it's today. They're trying to reflect a little bit more strength in there. So how's that? There we go. I love doing that. I love doing that. I love looking at new stuff. Anyhow, all right. So we're going to save that in case you come back to the webinar. We don't have to do too much work. Go save, space as, save, and then we will close it. There we are. All right. And that's in there now. So where were we at? Oh, yes, I know. We were looking at the euro. You can see it there on J4X. But if you have anything you want to see, 47, just ask. We'll show it. Yeah, no problem at all. And you can see Dukascopy has a bunch of stocks that they do on here. Let me just show you real quick. I've seen that too. A lot of European stocks. You can go down lower in here, you can see it. All these stocks. There's Hong Kong stocks, and there's Japanese stocks, and there's probably European stocks in there somewhere. What was that? There you go. There's a British company, Associated British Foods PLC. So they do lots of stocks in there. If you can find the American connection, we'll put it in ours and go from there. You can see that. There's German stocks. Oh, what is that? There's all kinds of stocks in there they do on Dukascopy. Look at them all. Is that cotton? Is that American cotton? Cool. Didn't realize they do cotton. Look at that. That's interesting. All right. NASDAQ dollar. Yeah, we got that. The new Kiwi Dollar. Yeah, let's check that out. Kiwi Dollar. Right. Where's that Kiwi? I see that. There it is right there. Kiwi Dollar. We have that on our spreadsheet every day. Right. Right there. Here comes the spreadsheet. There it is. It's 6 weeks in a sell, 5 days in a sell. Boy, look at that thing turning up. Now let's go over to that and check that out over here. There it is right there. Oh, you know what? Look at that. That is wrong. That's a 2 there instead on the buy side. How about that? I must have hit the wrong button there somewhere. We should check the... Oh, no, wait a minute. What did I just do? Wait a minute. Oh, that's NASCAD. That's what it is. Okay. I just screwed that up. That's how I do that manually once in a while. I screw things up. So it's 2 weeks in a buy and 2 days in a buy. It's already in there. And that was the NASCAD above it. 6 and 5. That's what it is. Okay. So, right there... That's the action we see in that. You can see that went into the buy here yesterday on the close. Actually, it's 2 days ago went into the buy right there. No one has asked about this product in a long time. Look at that. I don't even see any weeklies or anything. We went into a weekly sell here. Let's scrunch our math up a little bit here and just get a flavor of it. You can see here we went into a weekly buy, kind of like this top thing, huh? Went into the weekly buy here, couldn't get its act together, goes back into the weekly sell, and you get this nice sell off, and looks like it went into the weekly buy there, and it went up, and now it's but we're in a notice the let's do this, let's widen this like that. You can see when it went into the weekly sell, we're in a daily sell, so you really can't take the long on that until it comes out of that. right there. But that buy you could take the buy for, but you wouldn't have been long for this sell-off. So that's all right. That's a good thing. You don't lose money. That's the whole idea, is to make money. All right, there you go. There's the New Zealand dollar, the Kiwi dollar pairs trade. We haven't done that in a while. We had people here really followed that. We had one trader out in New Zealand that followed our math, subscribed to our service, was very active. We had a few of them. And then I guess the summer months make everybody go on holiday or something. That's what it is down there now, summer months, right? So everybody's on holiday. Hiking and fishing and playing. Do they do like Lord of the Rings down there or something? You know, because that's where all the movies were made. They all go kind of camp and hike around all those areas. Gondor, is that the... go to those castles and all? Oh, that feels good. You know, with a head cold, that tea really feels good. All right. What else we got to say about that? How's that? Is that satisfactory? Douglas, we can look at something else in there if you need to. You can see where it went into the weekly sell here. Let's put that in. We'll put both of those in. So if we come back to it and you ask for it, we'll have it. And let's check it out on J4X at the same time. Right there, right there, right there, bang, bang. So there it is on J4X. As you can see there, you know, we're through the weekly there we got 3, really, when you look at it. Look at that. That was almost unchanged, but it was green. So, you know, here's your 2 weeks in a buy. The line looks like it might have gone through there last week, but either way, you know, it's following in our footsteps in the with the Chicago Quant. That's why we have this indicator set up on J4X for everybody. And then let's see, what else can we say about that? That's the daily. Oh, that's the daily, right? So that's the daily. Let's see what the weekly looks like. Right there. Nice consistent trading, you can see that. You know, it goes into that weekly sell here. And we're in a daily sell like from here. Let's put that in there. You can see that. We went into a daily sell like way back here. Look at that. And it just stayed in that daily sell. And it went into the weekly sell. And it was just, you know, very profitable. Finally it got into a buy here. But you're in a weekly sell, so you can't take the buy there. So you can't take the buy there. And we can go like that, back into the sell again. And we can go like this. We can just make this go down for fun of it. So it goes into the daily sell there. So you catch a lot of this ride. All right. That completes that particular picture. See, there's a buy there, but again, we're in a weekly sell, so you don't take that. And then you get into this buy, and you don't take that, but you're not short. You're just kind of neutral again, stuck in a neutral thing. And then it gets into the buy. So, and then it goes into a sell there, goes back into the buy right there. So not bad. Good product. Let's save that. Save workspace. Save workspace. As. Okay. All right. Oh, what's this? Jacqueline says, "Hey Doc, a newbie here. Hey, welcome. Which trend lines and indicators would you consider essential at the beginning to get a grasp of it?" Well, you can see the tools we use. Let's show you a J4X to start off with. Okay? So it gives you a good generality. Here's J4X. And this is what we call our Manhattan indicator. Dukascopy is going to make it more formal. We've been using it for over a year now, and maybe a year and a half now. I don't know, 2 years, something like that. And we are, so to me, using the fast stochastic against the slow stochastic, and that's what that is. So you said, which trend lines and indicators would you consider essential? I find the fast stochastic, and I'm going to show you the mechanics of it right there. All you're seeing is the fast K, and let's see what the visibility is. I think all we do is we just show you the fast D, okay? That's what we're showing you there, and it's a 3, okay? You'll be able to go back to the video and look at this. Then the dashed line is the slow stochastic, and we're following the slow D, okay? And that's a 3. All right. Now, some of the inputs of this overall, if you want, you put your full indicator. The fast we have a 5, but I'm not sure if you're seeing it or if it's having much of an effect. But we have it in there. It's a 5-3, fast and slow. I'm sorry, fast and fast, K and D, for the fast, and then over on the slow, I'll show it to you again. It's a 5-3 and a 3 for the period on the slow. And so, but we're only reflecting on these. You can see we just show you the slow D of the slow stochastic, and we only show you the slow, I'm sorry, the fast D, not the K, okay? And you can see the outputs and so forth, the 3 and all that. And then we put them on the same chart. In other words, they're together, overlapping each other. Now that's a paramount. This is one of the best public indicators, or probably the best public indicator that I've ever found. Now the second thing we're using is we're using the Hinky-Ashke bars. Let's see if we can lighten that up. And this is these are the Hinky-Ashke bars. That's not right. What is that? Trend up, trend down. Oh, that's something else. Someone asked us to see that. I think that's what it was. They were watching trend up, trend down. So we cancel. We say okay. Just say okay there, and then we go to the Hinky. They're the Hinky-Ashke bars themselves of a daily. And if you go into a tighter, if you're going through a weekly, so forth. And so these are the 3 tools we suggest to use. This is probably some of the best you're going to find. And then what you have is, what we do is we compare it to my mathematics right here on this screen here. So that is, what is that? That's the NZD that sets the Kiwi against the dollar. And then this is my mathematics. This is a weekly indicator right here. This is the daily indicator, which you're looking at right there. Notice that the white line, when it breaks through the 0 line, is basically the dashed line. We call that like a 3-dimensional dash line. So it goes through it, it's bullish. When it goes down, when it goes down through it, there you go. When it goes down through it, it's bearish. See, it goes down in value ahead of time. And we follow our math the same way. And so what this does is this here on J4X is emulating my mathematics right there. I hope that helped you. And you're welcome to ask any question you would like at any time, because there are no dumb questions in trading. There are only long answers or short answers. That's all it comes down to. And so that's the indicators that we follow. We don't really follow too many trend lines. We talk about trend lines. We on an after effect. We look at them that way. Let's see. And so that is really that's it. And you're welcome to ask questions all the time. Like I said, when you're dealing with money and trading, there are no foolish / stupid or immature questions. There are none. Okay, no matter what you ask, because you're dealing with money and trading. So there are only long answers to your question or a short answer, but none of them are wrong. You can't be wrong by asking a question. Okay. You never know what we're going to learn from the question that you ask that you think might sound ridiculous. All of a sudden, the traders here are going to go, "Oh, never thought of that." Next thing you know, we're looking at it and we're finding a new tool. You never know what is right and what's wrong, except the only way you can tell is if you're making money or losing money. That's the only way you can tell if something is wrong or right. If you're losing money, it's obviously wrong. And if you're making money, obviously it's right. And so that's how that whole thing works. As I take a sniffle here, I think I'll take a cough drop. So, yes, you're welcome to ask, and I'm here every day. I love doing the webinar. It gets my frustrations out. I'm able to complain about the very poor amount of information that comes out about the financial markets. I love it. And that's what it is. All right, where are we leaving off there? Oh, we didn't even get to the British pound yet. Let's take a look at the British pound. We go through a rhythm every day. And if we make it through it, that's wonderful. If there's questions and we don't get too far, that's the way it goes. And people can just ask questions, and we can, and you can see things and so forth. So let's do this. Let's go over to the British pound and show you how it works with the British pound. Now you can see there, it's a lot of green hinkies, just the way we have a lot of green dots on our process here. You see that right there, all those green dots. And you can see the histogram has been through a long time. It went into a sell for 1 day on our work and back into the buy. We've been in a weekly buy for 3 full weeks there. Let's show you what's going on with, right there's the weekly on British pound. Matter of fact, I think it jumped in a week ahead of time even. So there's 3 full weeks going on a fourth. You can see the strength. The only difference is our math is going to be a couple hours ahead of everything, because our math is just that good. And when you have it on J4X, this math here, these indicators are going to be ahead of pretty much anything and everything out there in the public arena. So, at least you got public tools right there to be used right. And then you can see Doc's work every day and get a flavor for how well it's following along, which we always compare and show you how successful the J4X indicator. We've named it finally. We came up with a name. Hadn't had a name for it. We just said, we just called them the slow and fast stochastics and the Hinky Ashke bars on the bar chart itself. And now we refer to it as the Manhattan indicator. And we gave an explanation of that over the last 2 days, so you can go look at the videos and see me explaining why we call it the Manhattan indicator, especially yesterday. I think I go through a ramble of it yesterday. I go through a ramble of it the day before, and it's a fun story. As I have another sip of my tea there. Oh, and there goes the lid. So, and as I have a cough drop in my mouth, let's see, what else can we look at here? So you can see here the cable is, very firm. We're getting to where we were looking for it. We were looking for it to climb up to this 50 percentile area. Let's see, where's the mouse for it? Right there. So we've been talking about this. We have at Fibonacci. We believe that the central banks have currency pairs locked in ranges. And we've been following these ranges for I don't know how long now. It's been a while. We've been following these ranges for a couple years. And it all started when Secretary Mnuchin, under the Trump administration, announced who was manipulating their currency and who was not. And we went like, what? What do you mean, who's manipulating their currency and who's not? Everybody's manipulating their currency, as far as I'm concerned. But, when you have quantitative easing. And so, but we thought, oh my goodness, they actually have a set of rules. And no one will tell us what they are. And so, Secretary Mnuchin would come out every 6 months and announce who is manipulating their currency and who's not. We had no idea what the rules were, but one thing we knew for sure is that they had rules. And so then we started looking at some of the patterns and started to realize a couple years ago that they're trading in a pattern. You know, they're staying in a steady, consistent channel. So that's why we talk about it the way we do nowadays. And we have it Fibonacci from the bottom end of the range that we think we've identified to the top of the range. And so you can see here, if we tighten this up, you can see how it played off of it there. You know, let's see, where's that mouse at? You can see it played off of it there. There's the bar chart of it. And then if we scroll over, you can see how it trades to the top end of the range. It stalls out there, and then sometimes it bounces off the 50 percentile there. I mean, we're looking back there. Is that 2001 or 221? That is so that's the July. That's 7 months ago. And as we, go back into the past, you'll see that it kind of hovers through it. It bounced off of it. I guess it bounced off of it here for a while. It became a resistance, and I think it was set much lower, and the range changed. And when the interest rates change, we find the range change. So that's kind of fascinating in its own right. And then we got the inflation, and so it was even more fascinating. So some of these products have been doing for a couple of years. They've been staying inside their ranges. Trying to think of one. Like now, let's see, from the pound, we usually go to the Turkish lira. We've been following the Turkish lira for half a decade, I guess now. It's been fascinating to watch. Go from the 1.5 area to the 20.5 area in the euro Turkish lira, right there. You see it pushed itself into a sell there. We're in the weekly buy from here all the way up, and still in the weekly buy, even with the free puts and the government change in policy. And we're looking at the different types of ranges we've been following for a while. So that's how this all plays itself out. Let's see, what else can we say about that? I guess that's about it. If you want to see anything else, just shout it out. If you're looking for a product that you want to see what our math looks like and how the J4X works with it, just put it up on the chat line. We'll throw it out there. Doc enjoys talking about the markets. All right. Let's see, what do we got here now? So from there, we're looking at the Turkish lira, and as you can see, let's put it over here on J4X. We do a little sniffle there. Right there it is. This is the weekly, so let's get the daily in there. Here's the daily. As you can see, the weekly's still holding up. As much as they tried to push it down, it is holding up. And you can see the way it's working at this point in time is that what can I say about that? The Turkish lira seems to be trapped now in the center of the range of what the government has decided to support. So we'll see how that plays out. But right now we're still in that weekly buy. Today's Thursday. I don't think we're going to see it drop this week. Maybe next week, or maybe it'll start to turn it back up even more. Well, this is literally like an experiment watching the Turkish lira. This is an industrialized nation. There's only 35 of those countries in the world. What do they call themselves? The ECD, or CED. Was it the organization? That's it. OE, Organization of Economically Developed Countries. They're industrialized nations, and so you have like Britain and Germany, and you have Turkey and the United States and these things. There's only 35 of them belong to that organization, and so what you have is to see one of those countries go through their currency, watch their currency go from 1.5 to 20-fold all the way up to 20.5 is amazing. So that's why we're totally fascinated by following the Turkish lira. That alone does it. You don't see OECD, Organization of Economically Developed Countries, OEDC. That's it, OEDC countries. So that's what catches our eye on this particular product. It's not like we hate Turkey or love Turkey. We're just following the OEDC countries and watching one of them go kapooey. Their currency has gone kapooey. So that's what's going on there. That's why we follow it so closely. And if it was European Union, we'd probably have a couple other pairs trades up there for that, so forth and so on. All right, from there we go over to the Canadian, another of the OEDC countries. Right there's the CAD, dollar CAD pairs trade. You can see it's now resting on the, this has been following this particular channel for a couple years. You see it there. See those little blue dots? That's the channel we've been talking about. That's going back to, where's that? That's back to November of 2020. So you see here, we're down at the bottom or the middle of the range now. We're playing with the 50 percentile. That's the green. You can see we topped out again. Matter of fact, this looks like a head and shoulders at this point even. We've been talking about that for the last couple of days. You can see our work when it breaks the white line, breaks the 0 line with the histogram, just showing the strength of it through the time manifolds there. That's our work. It shows you the pressure and it goes down in value and vice versa. When you see it do it on the opposite side of it, over here, this is the daily chart, this is the weekly chart. So it goes into the weekly buy there, and each week we keep, we put a new line in there if it changes. In this case here, it went into the weekly sell there. I'm not sure why we don't have and we have a fact check spreadsheet too at the same time. There it is right there. And you can see here's our fact check spreadsheet. And you can see the Canadian is right there. We're looking at 2 weeks in a sell, 5 days in a sell. So there's your 2 weeks. This is going on the 3rd week now. And that's how you read our math. All right, traders, we're out of here. We will catch you all tomorrow. This is Doc from North America saying arrivederci. Happy trails to you until we meet again. Happy trails to you, to all our Dukascopy friends. Later, traders.